Hello everyone. Yeah, first of all, wish you happy Ugadi and Eid Mubarak to everyone who are celebrating. So in next 30 to 40 minutes, we'll learn, right? These are like refresher training sessions where to understand how to use the indicators, how to use a systematic approach and win 80 to 85% of the trades for earnings. Right? As you know, our indicators are not just for prop firm trading. We can use it for earnings plays or we can use it for major events. If there are major events like FOMC or CPI, PPI, PC index, job reports. We can use them for different things. Yeah, right? If you want to trade in personal accounts, then we can use them for earnings. If you want to do for prop firm trading, we can use them for prop firm trading. So I'll share you both the strategies. So how to do it so that right when you hear the same thing again and again, you will right that will become your muscle memory and you won't make any mistakes. So first of all, right, if somebody is new to complete earnings, I'll share like what are earnings plays, and then we'll look with some examples. So at the end of each quarter, right, there are thousands of companies which are publicly listed, right? All those are like public companies which can issue the shares so that they can raise investment from thousands of or millions of stockholders. So every 3 months they have to file their financial results, right? At the end of each 3 months. So this is like a cycle, right? Earnings will keep every 3 months. Again, all these hundreds of companies will report. At the end of April, again the new set of company, again the same companies will start reporting for the Q1 of 2025. Again April, May, June. Again from July they will report for the Q2 of 2025. They have to do different things like they have to show how much revenue they made for each year, what is the total net profit and net gains they made, and also they have to talk about the projections for the next 3 months, their future guidance. So there is the compliance, right? SEC requires all these companies, publicly listed companies, to do it. Generally, these earnings are done in two different schedules. One of them is called as pre-market hours, and the second one is called as post-market hours. Pre-market hours means because generally whenever these companies report earnings, there will be very high volatility. Suddenly stock can go so much up or so much down. That's why generally during market hours, these companies don't report their earnings. They will wait until end of the market or before the market to report their earnings. So generally if it is before 8:30 a.m. Central, right? Some companies may report at 5 a.m. Some companies may report at 6 a.m. Central. Some companies will report at 7 a.m. Central, like that. But anything before 8:30 a.m. they are called as pre-market pre-market earnings. Then anything after 3 p.m. Central, they are called as after hours earnings. So generally, whenever these earnings are reported, there can be a big moves either upside or downside. For example, right, these are the some companies which are reporting in the coming week. So you can see before open, right? On Monday, there are some nearly some, right? Again, there are nearly 40, 50 companies will report. But these are some of the top companies where there can be some high liquidity, right? Because there are thousands, nearly 6,000 different companies are there. But we don't track. There are some companies where there will be good liquidity, good volume, good, right? So that is what we generally track because there will be some small companies where they may not move much. So we don't track such type of companies. We only look at companies where there is enough volume or enough liquidity, enough volatility, so that we can right we can take advantage of the volatility. So on Monday you can see GRR, NOx, WKHS, FTCI, BLRX. These are different companies reporting tomorrow morning before 8:30 a.m. Central. And again after 3 p.m. Central, these are the different companies reporting. Like Red Cat is one of the top companies, Open Lending, PVH, MBST. So we'll also look at some examples to see how to study the charts or how to look at the confluence, how to predict what can be the earnings. So like that, this is a continuous process. Every week you'll have a lot of opportunities. And the major advantage with earnings is You don't need to look at the charts throughout the day, right? All you need to do is before, for example, if we have reports after hours, then between 2:30 to 3 or 2 to right 2 to 2:30, you can look at all these different charts, and wherever you see certain things, certain aspects, then we can look at take those trades. Or if something is reporting on Monday morning, on Friday after between 2 to 3 p.m. Central or 2:30 to 3 p.m. Central, you can look at this and you can take the trades. And Monday morning, you can just close the trades within the first half an hour, right? Between 8:30 a.m. to 9 a.m., you can take the profits or losses on those trades. So you don't need to look at the charts throughout the day. And then because of the high volatility with the earnings, there can be high return of investment, right? Uh, because as I said, there can be a big bounce. So, or there can be a big drop. If your direction is right, then there can be a high return of investment. And also before earnings, there will be a high implied volatility. So especially if you do bull puts, bear calls, sometimes even though stock may remain same or stock, even though you predicted it will go up, but it went down, still you can make money because of something called as IV crush, implied volatility crush. And also there are different other advantages with earnings play. Sometimes if you use a consistent position size, right, you have to make sure you are not taking a similar number of contracts, but you have to use a similar amount, right? If it is, I'll show you, right? Because that is one common mistake made by most traders. They use common quantity, right? When we say position size, they think like it is the position size, right? They take 10 contracts, 20 contracts for every trade. If it is a naked call, they take 10. If it is a bull put, they take 10. If it is a bear call, they take 10. If it is a naked puts, they take 10. If you are selling the puts, they take 1. So that is where there is a high risk. But if you use a consistent position size, that means a consistent amount which you are risking. So if you are investing into a trade, that means you are risking that $500, $1,000, whatever it is. So you have to risk a similar amount. Whatever is the type of the trade, you have to risk a similar amount in each trade. Then you will be ending each week with a profit. But if you use 10 contracts, 20 contracts for every trade, then even though you make profits in 5 trades or 8 trades out of 10 trades, the 2 trades, if they go loss and if they are a higher premium trades, then you may be at a loss, right? I'll show with a simple example so you also understand that how to do it. There are different strategies, right? I don't want to go with so much details, but first let us look at some different tickers for the next week and then try to understand how to use the indicators for earnings play. So, as I said, there are different tickers which are reporting on tomorrow. So, whenever you want to do for earnings, so what we need to do is always go to daily time frame to start with. Right? We have different set of indicators like we have T3 or we have beta. We have different indicators. So always, if you have more and more confidence, that will give you more confidence, right? If multiple right, each indicator is like a software. If different indicators are telling you the same thing, that means you have higher chance of success. So for example, let us go with some examples, right? But before that, anyone has any questions until now? Why earnings plays? What is the major advantage? Because most of you are full-time employees, you cannot right look at the charts throughout the day. The advantage is with spending 30 minutes before the close and spending 30 minutes at the open, we can win 8 out of 10 times. So first, how to take the trades and how to use the position size, I'll explain with examples. So we are looking at some examples for some trades which we have earnings tomorrow. So so we have different indicators like P8 or so let me just add them so that You will also understand. Or we have something like T55. What is confidence? So let me hide those. So for example, right, we are looking at one of the tickers for which we have earnings tomorrow. So here I have different indicators like price pulse, I have T55, I have T5, different indicators. So let us go one by one, right? We are in the daily time frame, right? If you are trading for a quick move, small moves, we use smaller time frames. If you are looking for something like a major event like earnings, then we need to look into daily time frame. So now if you look into the daily time frame for this particular, again, right, one thing you remember is there is nothing which is 100%, right? There is no strategy, there is no algo, there is no analyst who can give 100% success. But it's all about if you can make 80% of the time, if you can make money, and if you use a consistent position size, at the end of the week, you will be in profits. That too without spending a lot of time. So now we are looking at this particular ticker called GRRR, for which we have earnings tomorrow morning. Let us look one by one. So if you look at this indicator, it is telling that it already went all the way to the top. Then at the top, it did consolidation, right? That means sellers are trying to bring it down, buyers are taking it up, sellers are bringing it down. Finally, sellers took the control. They started dropping it, right? That means there is, right? What is by looking at T5? What do you interpret by looking at T5? Do you think it is bullish or bearish, right? By looking at the chart, do you? So it is looking bearish, right? If you see a red dot and there is a nice gap between these two, that means the trend is bearish. So this indicator is telling that there is a high possibility for a stock to drop. So so again, there is a lot of gap and there is a lot of time for it to go to oversold condition. So there is a high possibility for a drop. So your number one tick is done. Then now we have T55. It is another indicator which we use. That is also giving a sell indication. That is telling that okay, price is can go further down. So no, so your T5 is telling it will go down. T55 is telling it will go down. Okay, now if I look at my price pulse indicator, right? As long as your line is red, that means if the price is below this red line, that means overall trend is bearish. So your number one, number two, number three different algos are telling the same thing. And what do you think the possible scenario where it can go, right? Where you can also see where the big companies want to buy it. The big companies are waiting to buy around 20 or $21. So there is a high possibility for a drop. So either you can do stocks, you can do options. But sometimes what happens is, even though our prediction is right, it will drop. But sometimes by the morning it will touch this and then start going up, right? That's why we have sometimes problem. That problem where even though our direction is right, immediately tomorrow morning when they report the earnings, it may drop all the way. But because buyers are waiting here, sometimes it may go up. But if you are shorting a stock or you can do a bull put, right? If you go below this and do a bull put, your risk is minimal. That means you are telling that the price will stay above 20. If or you can go somewhere if you see a big sell order block, you can go above that, you can do a bear call spread. When you do a naked, for example, if we do a naked put, let us say it drops $2, $3 and stays here, then you will make 200% profit. But there is a risk where sometimes it will come all the way, right? For example, Chewy or we took Micron. Those things happened in the same way. Micron went all the way up. Then there was a big sell order block. It touched it and then dropped. So even though our prediction may be right, but sometimes what happens is they may go all the way down right? It will drop all the way from $25 to $20, and then suddenly next day morning it may start going up, right? Immediately after the earnings, we can, right? We feel like, yeah, we made some nice, we'll make nice profits. But next day morning, when it may start going up. So, but for example, if you short a stock before the earnings, suddenly it drops $1, $2, then $2, $3. Immediately you have a buy limit around 21, $22. So that $3 on each stock is right. Even if you do 100 stocks, 200 stocks, you can make 500, $600 within few minutes. So that is the advantage, right? Or so now price pulse is basically telling, right? Your table is telling it is completely bearish, and your this one is telling it is bearish. Your T5 line is telling it is bearish, and your buyers are somewhere waiting here. They are not waiting somewhere here. The big companies are waiting somewhere around $5 below the current price. That means they are expecting that price can drop all the way to $21 or $20. So that is a high possibility. So again, if you want to take a risk, right? So now let us take this example and let us see like how to use consistent position size. Right? For example, GRR. For example, let us say I want to buy a put, right? Approximately $25 put. Let us say right now, because it is after hours, you must be see the spreads very far away. But let us say your overall account size is $30,000. Right? Remember that consistent position size is not consistent quantity, but it is similar amount which you are using. So let us say you have a $30,000 account for your options profile, right? Or for your options portfolio. You may have a 50K for stocks portfolio. You may have a $30,000 for options portfolio. Make sure you use only 3% for each trade for options, right? 3% is approximately $1,000. So you want to risk $1,000 risk for each trade, right? You don't want to risk more than $1,000. Let us say GRR earnings on Monday morning. So again, right? Again, if we go back, T5, T55, price pulse. If I want, I can say T3. T3 is telling it is a sell, right? It may drop. Then if I go to beta, beta is also telling it is a sell, right? There is a support somewhere here at $20. Then if I go to T8, T8 is also telling, right? There is a resistance here. There is a support around 20.7. If it If that also breaks, then there can be much bigger drop. But as of now, 20.65 is the support level. So my T8 is also telling it can drop. So whether you use T5, use T55, use price pulse, use T3, beta, T8, whatever you see that price is dropping, your candles are red, and your support is somewhere here. So there is a high possibility for price to come all the way to 20.67. If that also drops, if there is a major bad news or major bad earnings, then it can go much further down. But let us assume, right? So let us say we want to buy 25 put. So we are overall. So first thing is understand what is the direction. So based on confluence of confluence of different indicators, it looks bearish. So whenever it looks bearish, one thing we can do is we can buy the naked puts. So for example, now the stock is around $25. What we can do, we can go and buy naked puts for 25 naked puts, GRR 25 put for the coming Friday, right? For example, let us say it is approximately 25 put, let us say approximately $2.5, right? So $2.5, that means $250 for each contract. Because for one stock it is 2.5, but for 100 stocks it is $250. That means if $1,000 I want to risk for each trade, I can do four contracts. So I have to buy only four contracts. Or let us say I want to do bear call spread, right? Because I am expecting it to drop to somewhere here. So what I can do, I can go and do a bear call spread. That means I am expecting it that this will, so I can sell some 25 and I can buy some 27, right? So bear call means we are bearish about the stock and we want to sell 27 or sell 25 call and buy 27 call. So you have to do go here, you do sell vertical. So for example, you want to sell 25 call and you want to buy 27 call. That means you are collecting around $72. 72 is your credit. So if stock stays below 25, right? So there is very high possibility for stock to stay below 25 because you have a lot of confidence from all different indicators. Even though it may come touch this, but it may not go all the way up again, right? Even though it may touch, it may go $2, $3 up. So what we can do, we can sell 25 call and buy 27 call and collect around 70, let us say $75, for example. So your spread is $2. That means $200 is the risk. Credit is around $75. So that means your overall net risk is $125, right? Overall spread is $2, but you are collecting a premium of 75 by selling this because we are expecting that the stock to go down. If it stays below 25, then all that money is yours, right? Even if it stays choppy, let us say you bought a put, but it stayed choppy, you lose the premium. But if you are doing a bear call spread, even if it stays choppy also because of IV crush, because of uh, theta decay, all those reasons, you will make money. So your risk is less. So now, if your net risk is $125, then what we have to do? You buy eight contracts now, right? Instead of here, it is $250 is risk for each contract. But here, your net risk is only $125. So we'll buy. So if you are a low risk trader or a medium risk trader, this is the best opportunity, right? This is the best one where you have 85% chance of making money. So you are a high risk trader, right? You have 70% chance of making money. Let us say stock went all the way down to $20 and staying there. Your $25 put will make 300, 400% profit. So here your chance of making 300% to 400% is high. Here, even though it goes to 20, $15, $10, whatever it is, the maximum you make is $125. Whatever credit you received, that is the profit you are making. You are risking 125, you can make $75. Here you are risking $250, but if it drops to 20 and just stays there, or suddenly there are more sellers than 3.9, then it can even drop further, come all the way to $12, or come somewhere here where EMA 200 is there. So then you have a high possibility to make nice profits, 300, 400%. If it doesn't move, then you can also, you have a high risk and high reward. So you are a medium risk trader, low risk trader, or medium or low risk trader. So you have a 80% chance to make money here, but you'll only make low reward, right? You can also do one more thing. You can also, right? You can say you want to buy 25 put and you sell 27 put. So that, right, this is more like you are a medium risk trader. That means you are not completely buying a put, naked put. You are buying a put, you are also selling a put. So instead of paying $250, you may pay only $150 is your risk. So instead of doing 4 contracts, now you can do 7 contracts approximately. So if you are a so debit spread is where you are not just buying a naked put, you are buying a put, you are also selling a put. So if it goes below 25, you will make profits. And also you are collecting. So even if it stays choppy, also your risk is instead of $250, now your risk is only $150. So if your risk is 250, you will do 4 contracts. If your risk is 150, you will do approximately 6 to 7 contracts. If your risk is $125, you are only taking 8 contracts. So based on what type of trader you are, right? You are a trader who want to, as I said, right? Our indicators are giving you a confidence that it will drop. So 90% it will drop. But whether it will drop and stay here or can it drop and bounce, that is where if, for example, you don't see this sell order block here itself, right? It is somewhere at the bottom. Then confidently we can go and buy the puts, right? Or so one more thing, right? You can do is you collect the money here, $125 on 8 contracts. That means already you are collecting some nice premium. Then use some of that money and do some naked put or debit spread. So now your risk is minimal, right? You are first collecting the premium, getting the money, and use that money to buy some. So if it stays below 25, all this money is yours. If it stays below 25 and around 20 or 21, you make money from this, you make money from this, you make money from this. Or, right, you are more of a low risk trader. You are okay to make, right? You want higher percent of chances to make money in 90% plus chance to make profits, right? You are happy with low reward. You don't want a 200%, 300% in one day. You are happy with even you are collecting $75, you are happy with it, right? You are spending 125, you are collecting 75, approximately 40%, 50% profit you are making in one day. If you lose 125. If you win, 90% of the time, you can keep all the $75. So this is right. So you need to understand that okay, I am of a more my profile is more of a low risk trader. I'll do a bear call spread. Or I am a medium risk trader. I don't want to settle for too less or I don't want to make too much. I'll go for a debit spread, right? A debit put spread. So I am buying a 25 put, but also I'll sell a 27 put so that suddenly it stays choppy. I can Uh, my risk is not 250. My risk is only 150. Like that. If you are a medium risk trader, you may not make 300 to 400. You may make 100 to 150% gain if it drops to $20 or like that. So this is how you need to position size. Right. First thing is look at different indicators, understand whether it is bullish or bearish. Second thing we are doing is okay for my type of nature. I am more of a risk taker. I'll go with this. I am a low risk taker, right? I want 90% chance of making money with a low risk, then I'll go with a bear call spread. You are a medium risk in between this, right? You don't want to go with naked puts. You don't want to go with just a bear call spread where you are where your profits are less. You want to go somewhere in between, right? Maybe you may do buy 25p and sell 28p, right? So like that you have to. So this step is also very, so most of the members, the problem is where this sizing is the problem, right? They take the consistent size, whatever is the investment, whatever is the risk, they take 10 contracts, 10 contracts, 10 contracts. Based on your risk, you have to, you have to, right? You have to decide what is the position size, right? Let's go to one more ticker and then you have to tell me whether it is bullish or bearish, right? Let us go to, okay, let's go to something which is tomorrow afternoon, right? So again, right, I am not telling you something from the past. Tomorrow you can observe these results, right? GRR, we are bearish. Then let's go to something like there might be some tickers where it may not be right. Some indicator may, some one indicator may tell bullish, one indicator may tell bearish. It is better to avoid such type of tickers. Wherever you get a proper confluence, those are the best ones, right? Those are the best opportunities because all different softwares, each software uses a different logic to tell whether that price can go up or go down. So let us look at BLRX. So if you look at this particular ticker, so now again, if you go here, you see that this is looking bearish based on T5. If you are looking at T55, it is looking bearish. Right? The volume, seller's volume, little went down and again seller's volume increased. That means it is also looking very bearish. Then if you see here, there are a lot of big sellers are ready to sell it at around $4. Right? Whenever if price even goes up, they want to sell it. And then you can also see some more sellers here. And where are the buyers? If you see buyers, right, you don't really don't see any major buyer, big companies, right? But minimum, even if it does a double bottom, it may come all the way to 2.88. So we don't see any big companies ready to buy it. So now let's go back and hide this. Now go to T3. T3, it shows it is in a sell. It is bearish. We go to beta. It shows complete trend is bearish, momentum bearish, trend strength is bearish. So it is also, if I see, right, I got a strong sell, keeps dropping, dropping. It is also looking bearish. Okay, now if I go to T8, so if I go to T8 indicator, also it is showing that, right, it went to the resistance. It is close to a resistance and there is no strong support close by. So again, there is a high possibility for a drop. But again, your lowest risk is if I go and do a bear call above this, or if I sell 4 put, right? If I go to BLRX, right? Let us say BLRX earnings, right? Bearish. So it is also looking bearish based on multiple indicators. Again, I can buy the puts, I can do a bear call spread, or I can sell a call, right? Because I see that there are a lot of sellers waiting here. Even if price goes here, it will drop. So if I sell a four call, right, I can buy the put or I can sell a call. That means I'm telling that if it goes above four, I'm ready to sell you at that price. But if it stays below four, then all that money is 100% yours. So your risk is minimal. If you sell four call and collect the premiums, you can, if price stays here, price goes down, price goes all the way up until four. Only if it goes above four, where the chances are very, very less, you can keep all the 100% of the premium. If I sell four call, right, four call is around $4.9 or right somewhere around $2.5, $3. I can collect. So if I do a sell, right, I can keep the bid somewhere between the buy bid and ask. So again, it is a low liquid picker. So we may not have a lot of buyers even if we try to sell it. But just for example, or I can just short the stock because I see that there is a high potential for a drop. Right? Let us look at something. So you need to see where you have a proper confluence between all the indicators, then your success will be much higher. Now let us go to BCLI. Right? Same thing. T55 is telling it will drop. You have a lot of sellers here, sellers here, sellers here, sellers here. There are no buyers. I don't see any buyers in pros buy. Right? If I hide price pulse, if I see T3, I see that T3 is also in a sell signal. It is dropping, it is going up, dropping, going up, dropping, going up, dropping. Beta. If I see beta, so basically it is the same thing where you have a confluence, right? Again, T8. We are below a resistance line. We got a pivot sell signal. Then there is a high possibility for a drop. So even BCLI is very, very bearish. So again, we can buy the puts, we can sell the calls, we can do a bear call spread, we can do a debit put spread. Let's look at something which is tomorrow evening. Okay, here you have something which is looking bullish in T5. It is still bearish in T55. So here it is close to a resistance. So what do you think can happen to this? So what do you think can happen to this particular stock? Yeah, it is right. You are not exactly sure, right? Because this one is not exactly bullish, right? It is showing green, but again, the curve is not pointing towards the upside. Here it is still showing bearish. Here you have a lot of sell orders here. You have some buy orders at 54, 52. So again, there is a chance for a drop, but still, right, it is more moving in a sideways direction. There is no proper downside or upside. So one way you can do is you can do a bear call spread above this, right? Above 72, if you go and do bear call, your risk is low. Or you cannot go below this, you won't get much credit. If you go all this way down and do a bull put below this, the premiums will be very, very less. So here, if you buy a call or buy a put, your risk is high, right? Because one indicator is telling bullish, one indicator is telling bearish. This one is showing buy sell orders, this one is showing buy orders. Instead of buying a call or buying a put, it is better you do a bear call spread. If you go above 72, right, it is a low AR. Now I can go somewhere like 70. I can do sell vertical spread. I can sell 70 and buy 75 call and collect around $100 or something. Then your risk is minimal as long as it stays below that $70 price, right? Or even if you want to take much lower risk, you can also go to 75 and 80. You sell 75 and buy 80 call. You are still collecting some money, right? What is the chance of stock to go above 75, right? Here itself you have a lot of sellers. This is telling it is in a downtrend. This is also, even though it is showing green, but the curve is not pointing towards the upside. The curve is actually pointing towards the downside. That means it did a small pullback, but again it can drop. So if you do a sell order, right, a bear call spread 75-80 on this one on LOAR, your chances of success are very, very high. Right? You are collecting 90% of the time you will make money. So if I buy 70 put, so if I'm doing sell 75, right, and buy 80, that means there is a $5 spread. That means $500 risk, but I'm collecting around $50 as a premium. So that means 450 is my net risk. So because my size is $1,000, so I'll take only two contracts. If the put is 5.5, if I want to take high risk, right, if suddenly it drops from that $66 to $63, or it drops further below, right? If it drops to 54, then I may make 500 to 1000% gains because here the buyers are there. So price will always try to go where there is high liquidity because this is bearish. Most of other indicators are looking bearish. So here you have a higher potential to make money. But if it stays choppy, because if it stays sideways, then you lose all this money. So you have less chance of winning. Here you have 95% chance of winning because you have a huge sell block here, right? The indicators are telling price will go down. And also we are seeing that there are a lot of sellers here. So if price stays below this 71, then all that money is yours. So that's what now you need to understand that okay, here my chance of winning is 95% because the very already indicators are telling downtrend, and then I'm going much higher, and then I'm taking a sell block, sell order, right, bear call spread. So the chance of the stock going all the way above this, again I see a lot of sellers here, lot of sellers here. So you can make nice profits. So like that, once you analyze and you put your position size appropriately, then you can decide that okay, here because it is moving sideways, I have less chance of winning, so I'll avoid this. I won't take this trade. Here, or if you think like, oh, to make $50, I am risking 450. I'll not even right. Don't even take this trade because your risk is nearly 450. Your gain is $50. If it goes down, you'll only make $50. If you think like your risk versus reward is not matching, then you just avoid this ticker. Don't even take it trade because every day you have hundreds of opportunities. Every day you have hundreds of stocks. For example, if you see this PRPH, you have a lot of buyers here, you have sellers here. So again, here it is buy, here it is buy, here it is bullish, here. So if I go below this and do a bull put, or if I put a buy order block, right, buy stocks, right, put a limit order here. Price comes here, sometimes it may come, touch this, and suddenly go up. After earnings, may come here, grab the liquidity, and then go all the way to the top. So you can put your stock price somewhere around 0.35, 0.36. Suddenly stock comes here, then you can buy the stock. Again, suddenly it will go up after earnings. Then you can take the profits around 0.55, zero point 0.6. That is 40%, 50% gain within few minutes. You can also do a bull put spread, right? If it has calls, you can do because your multiple indicators are telling price can go up. The trend is bullish, momentum is bullish. You have a lot of buyers here, you have buyers here, you have buyers here, you have sellers somewhere around here. That is nearly 40% up from 0.44 to 0.65 is 40% gains within few minutes. Right? You can even buy the stock. You buy some 10,000 stocks. Suddenly stock goes here, then you put a limit sell order 0.61. Then immediately when it hits that 0.61, you will take the profits. Even if it goes up and starts dropping, you don't need to worry. Right? I hope it is making sense. Right? Here it is bullish. It is telling that price can go up. Right? The curve is pointing towards the upside. It is there is a lot of gap between these two lines. Here it is telling right price dropped, started going right. Here buyers, number of buyers are increasing. The bars, right? The size is increasing more and more. That means more and more buyers are buying the stock each day. Here you see buyers are still waiting, right? If price comes here, there are nearly 1.1 million buy order block. That means there is a lot of possibility for price to go up. So like this, you need to analyze and then if you think right, you can buy the stocks, you can do option calls, you can do bull puts, you can sell the put, and you can make profits. So for PRPH, we are bullish. For BCLI, we are bearish. For GRR, we are bearish. Like that, you look at multiple. So one thing is you have to look at the confluence. Second thing is if multiple indicators are giving same signal, and if you are there is lot of gap between the buy orders and sell orders, that is a good opportunity. If the buy and sell are very close by, then it can move in a sideways direction. If your confluence, if you have lot of indicators telling the same thing, you have high chance of success. Here, E8 is telling that we are at a proper support. You got a buy signal. There is a high possibility for a bounce. So yeah, we are bullish for PRPH. So like this, basically for earnings, just the last 30 minutes before the market close, you can or right even before you can look and you put these ones right during the weekend or during the evening time you can put whether bullish bearish which tickers and then before half an hour you go to those tickers where you are and see if there are any new order blocks, right? If you see, for example, tomorrow I see another big order block here. Then we can confidently go and take the trades, right? So in that way, you can, right? You are spending some half an hour when you are free completely in the evening time or over the weekend, and then you are analyzing the stocks. Once before 15 minutes, you go to those tickers and then just look at those. Okay, GRR, I was bearish. Okay, now also I see another new sell order block. Then you can be a lot more confident and you can buy the puts. Or suddenly you see more buy order blocks or something. In that way, last 15 minutes. So initially you are doing a planning and you are analyzing whether it is bearish or bullish. And then before 15 minutes, you can just go and do the final analysis. Because last 5 minutes, last 15, 20 minutes also, there might be some new buy orders or sell orders. If you get more buy orders or more sell orders in the anticipated direction, your chance of success will be much more higher. That is how we use our indicators for earnings. Then the second thing is I wanted to tell you the prop firms where you don't need to use your own money. For these ones, always right for every if you have a $30,000 account, use thousand for everything. If you have a $50,000 account, use 1500 for every ticker. So out of 10 trades, you will win 8 trades. You will be at the end of the day, you will be making money. So and then yeah, the next one I wanted to share is for the prop firms. Right? For prop firms, mainly what we do is again you can use the similar approach of confluence, or the other thing you can easily do is you divide your layout into two parts. Right? Here, if you go to the layout, you have something like two windows. So now you go to those windows, and in one window you select 5 minutes. In another window, you select 1 minute. Right? And then right, for example, you can have some indicator like price pulse and T3. So always your higher time frame is the master, right? Always higher time frame will carry more strength than the lower time, right? If you are using 1 hour, you can use 15 minutes. If you are using 4 hours, you can use 1 hour. If you are using daily, you can use 4 hours as a smaller time frame. If you are using 5 minutes, use 1 minute as the lower time frame. So, right, always wait for a sell signal or buy signal, right? For example, you got a price pulse sell T3 sell around 845. Then this is your planning, right? This is where you plan your direction. You don't execute using the higher time frame, you execute using the lower time frame. Now you saw that you got a sell signal here. Now you will go and so around what time frame you got? Around 845. So then after 845, whenever you see a price pulse sell or you see a T3 sell, you you take a trade. Or you wait always if the candle is so far away from your T5 line, right? Always you should, right? Your T5 line or price pulse line, they are like your base. If there is a lot of, right? So if you see here, right, this candle is nearly $6-7, 6-7 points candle. This is a huge candle. So when you get a huge candle, right, and which is that means it is very far away from your T5 and price pulse lines. So better you wait for a pullback, right? Price will always come back to the T5 and price pulse lines. So when your candle is, so first thing is you got a sell, right? Now you got, right? Now you should be ready. Until this time, you won't take any trades. You got a sell signal. Now you will understand, right? Okay, now from now onwards, until you see a buy signal, you have to take sell opportunities here in the smaller time frame. So now You got a sell right here around 8:45. I got sell. That means after 8:45, whenever you see a T3 sell, you take a short. Again, you got a T3 sell, right? Or basically, what we are doing is whenever price goes back to the line, you get a sell signal, right? So basically, or right again, what we are doing earlier is whenever you have a sell, you wait for price to touch the T5 red line and then take a short. Whenever price drops, take the profit. Again, you will have some green candles. They will come back to T5 line. Again, you see a red candle, you take a short. Again, you will have some red candles. Again, you take a short. Again, you will have some green candles, take a short. Again, you have, right? Whenever you see some green candles coming closer, until, right, as long as this is sell, you will continue to do that, right? If you have a buy here, right? Once you have a buy, then again go to 1 minute and check whether you have a buy here, right? First thing is you have to see a buy, price pulse buy. Whenever you have a price pulse buy, you have to wait for a T3 buy, right? First thing is you wait for the price pulse buy in the 5 minutes. After that, if you get a T3 buy, you will take it. Again, you got a price pulse sell. Again, you will only take T3 sell signals, or whenever price comes to the red line, you will take the short. Like that, right? Always, this is only your planning. For planning, you do it. For execution, you use a lower time frame. If you are using a 15-minute, use 3 minutes. If you are using 10 minutes, use 2 minutes. If you are using 1 hour, right? For prop firms, generally it is better you do 5 minutes and 1 minute in the US time frame. In the non-US time frame, you can use 3 minutes and 1 minute. If you have 3 minutes here, use 1 minute here. In the India market hours, or right, Asia market hours, Europe market hours, 3 and 1. In the US market hours, always use 5 and 1. If for personal account trading, right, if you're trading in your personal accounts for futures or stocks, then you can use 15 minutes and 3 minutes, or you use 30 minutes and you can use 5 minutes, right? Whenever you have a sell in 30 minutes, then you wait for a sell in the 5 minutes and then you buy the option puts. You have a buy in the 30 minutes. Then whenever you get a buy in the 5 minutes, you can buy the option calls. You can do the bull put spreads. So always your higher time frame carries more weightage. Always you have to trade based on, right? Always use the higher time frame for your planning. Use the lower time frame for the execution. If you use only one side, that means sometimes you might be taking a trade completely in the wrong direction, right? You might be taking, if the trend is completely bearish, you might be doing a buy signal. But the trend is completely bearish in 1 minute, 5 minutes, 15 minutes, 1 hour, right? Maybe in 1 minute it is bullish. If you are only watching 1 minute, but 5, 15, 1 hour, everything is bearish, you see 1 minute and if you take a trade, suddenly it goes up 1, 2 candles, suddenly there will be a big drop. That's why always use a higher time frame to analyze the trend, and then use the lower time frame for the execution. So if you use 5 minutes and 1 minute, right? One way is, if you are an experienced trader, we can do this. Whenever you have a price pulse sell, wait for price to touch the T5 or price pulse line, short it. And again, price will come up, again short it. Again, price will come up, short it. Like that we can do. But if you are getting confused with that approach, then you do this approach where use 5 minutes in one window, so that you clearly know, okay, are we in the sell or are we in the right here? If you want, you hide the T3 also. You just to wait for the price pulse sell or price pulse buy. Whenever you get a price pulse sell, then you look for the T3 sell, right? Your first thing is you should get a sell signal here. Here, whenever you get a T3, you can short it. Until you see price pulse buy, you will only keep taking short trades in the smaller time frame. Right? This T3 sell will help you whenever price goes up and starts dropping, it will give a sell signal. Again, price went up, starts dropping, it gives a sell signal. So that you know that trend is still bearish. You are taking those opportunities of shorting again and again. Right? Price drop and went up. Again, it is telling that okay, if you missed the previous opportunity, now you can sell it. Again, it dropped so much. Again, it went up. Again, you got a sell signal. So price is not able to break the T5 line or price pulse line. It is always going up and dropping, going up and dropping. So if you missed this opportunity, right? We know that still price pulse is bearish, right? It is still in the sell signal, right? Until 12:30, 12:45, it is bearish. So, so you got opportunity here. You missed this opportunity. Then you got another opportunity here. If you missed this opportunity, you got another opportunity here. Just whenever you get a sell, okay, check here. Okay, is in 5 minutes, am I in sell or not? If you are in sell, that means that is a good one. So, so here you are in sell. Here you got a buy. You will ignore it, right? Always your 5 minutes is your priority. If you're so if you get a buy, you just close the short trade and wait. And again you got a sell. Again you got a sell. Again you got a sell. Again you got a buy. But still until 12:30, it is still in the sell. So you will avoid the buy signals. So only whenever you get a sell signal, you will take the right. Your if 5 minutes is in sell, you will only take T3 sell. If 5 minutes is in the price pulse buy, you will only take T3 buy. In that way, you will be with the higher time frame trend. Otherwise, if you look only 1 minute or you look only 5 minutes, sometimes you may be in the opposite side of the trend and you may be taking when it is going down, we may take a long. When it is going up, we may take. But if you follow this approach, use price pulse on the 5 minute time frame. You can use top trend or T3 or T8 or whichever indicator you want. You can use that in a smaller time frame, in 1 minute time frame. And then, so or as I said, if you are not getting confused, even you can use price pulse. So here also price pulse 5 minutes, it is in a cell. Whenever you see that price is going to the T5 line, you can keep taking the shots. Right? Price will never go in one direction. So here 8:30, 8:40, we got a sell signal. After that, whenever price is going touching that but not able to break it, you got a PP sell. Again it went up, you again it dropped. Again it tried to go up, again you got a drop. Again it tried to go up, again you got a drop. Again it tried to go up, you got. So this is acting as a resistance. So you always want to short it close to your T5 and price pulse lines. Right? Don't short it when it goes all the way away from here. You have to book the profit. When it is close to this one, this is like your resistance line or this think like a sell order block. You want to short when it is close to a sell order block. If it is a blue line, that is a buy order block. You want to buy close to the buy order block. You want to sell close to the sell order block. Whenever price goes up and not able to break it, you see that again, this is acting as resistance going down. You are shorting it. Again, it went all the way down. Whenever price, again, you got a green candle, but not able to break it, right? Again, these sell order blocks are hitting it. Again, it came all the way down. Again, it tried to go up. It was not able to break it. You got one more red candle. Again, you short it. So if you use this approach, if you are so one way is use price pulse in 5 minutes, price pulse in 1 minute, wait for price to go up, touch the red line, or if it is bullish, it should come and touch the blue line and start going up. So that is one approach. Or if you are getting confused when to sell, then what you do, use some indicator like T3, T33, beta, top trend, and then wait for a sell signal. We know that in 5 minutes we are bearish. You wait for a T3 sell. If you missed this opportunity, then you got another T3 sell. You missed that opportunity. You got another T3 sell. You missed that opportunity. You got another T3 sell. So like that, as long as 5 minutes is in the cell, you will only look for T3 cell or top trend cell or beta cell, right? Or T8 cell, T33 cell, like that. But your higher time frame, we use price pulse as our main direction, or that is our main guide in the 5 minutes. In the lower time frame, you should take the trades in the same direction. If your 5 minutes is in the buy, you should only take the buy signals in the 1 minute time frame. So that is one more way where you can do for prop firm trading. If personal account, you can use, as I said, you can use 30 minutes, you can use 5 minutes. 30 minutes in the higher time frame, 5 minutes in the lower time frame. If 30 minutes is sell, then use only sell trades in the 5 minutes. Can we do sell in future? Yeah, you can sell futures without holding them. Yeah, you don't need to buy them first. You can sell them and then you can. If we look at Tesla 30 minutes, and let us do 5 minutes in smaller time frame. So we have some buy orders around 257. So if price comes to 257 tomorrow, we can see a bounce. So until this time, you only look at the sell signals. Once it comes here, it can bounce back. Then we can start looking at the buy signal. So this is our next support. Or if you have beta, I'll go. So beta will show you where you have your support. So if it comes to this, then you can start taking the calls or you can start taking the bull puts. If it goes to 278, then you can start buying the, right. Once it touches the 278, then it will start dropping. That is where you can start taking the puts in the 5 minutes time frame. So your higher time frame will always tell you, right, where your buy orders, where your sell order, or where your strong support, strong resistance. So if you buy here, if it goes little bit down, you can take a stop. Otherwise, it will generally bounce from the strong support area. So if it goes to 257, you can buy the stocks or you can do the bull puts for Tesla. So again, right, let me show you one more time. Let's take example with gold, right? Here I'll use 5 minutes, right? I'm showing both the examples, one with the long side, one with the short side. Then here I'll use GC, but here I'll select 1 minute. So for example, at around 8:45, you got a buy signal. Around 8:45 or 8:50, we got a buy signal. But this candle is so far away from your T5 line and also from your price pulse line. Your price pulse is somewhere here. It went all the way to the top. So after that, check when you got your next. So after 8:45, here price came close to the T5 line. Here you can go long. Again, whenever price goes away, you take the profit. You wait for a pullback. Again, you got a green red candles, touch it, came close to the T5 line. The next candle touched the price pulse and T5, you can go long again. Again, when price goes away, again you take the profit. Again, you wait for candles to touch it. So if it touch and you get a price pulse sell, you will avoid, right? Only as long as if you see buy signals, you will go long. If you see sell signals, you will avoid those trades. Again, you got a sell signal. Then only whenever price comes close to the T5 or price pulse line, you will take a short trade. Right? It dropped all the way. Then again it went up. Again it dropped. Again it went up. Again it dropped. So as long as your higher time frame is in a sell signal, you will take the short trades in a smaller time frame. If your higher time frame is in buy signal, you will only take buy signal. So if you by keeping it in this way, you will know whether higher time frame is in buy or sell. Based on that, you can take the trades. Otherwise, you may miss like what is happening in the higher time frame. Right? You can even close this one. Right? All you will have is these two. If you're if this is bullish, then you will only take buy side. Right? Here you will go click on buy. As long as this is bullish, right? From 2 o'clock from 3110 it went to 31120. So here if you see, right, let me hide this T3. So at around 155, I got a buy signal here. So 145, I got a buy, but I'll only wait for the buy signal after the buy here. Or whenever I get a buy, then price you see a red candle close to the T5 line, then you can go long. Again, price came all the way down. Again, you got a buy signal. Again, you got a buy signal. Right? When you get a T3 sell, you close it. Again, you got a buy signal. You go long. Because here I see that it is still in the buy. As long as 5 minutes is buy, only you will look for the T3 buys or you will look for the price pulse buys. Or you look for price to come touch the T5 and then bounce back. Whenever it comes and then you see a green candle, you go long. You got a T3 buy, you got a T3 buy, you got a T3 buy. So whenever, right, you have this view. As long as your 5 minutes is in a long signal, you only take T3 buys here. If you get a T3 sell, you just close your long trade. Don't open a short trade. So here, this blue line is like your buy order block. Whenever price comes to the blue line, it will go up. But because sometimes from here to the blue line, it can be very big. There can be 5 points, 10 points drop. So that's where we are only doing the planning in the higher time frame, but doing the execution in the lower time, right? Instead of waiting for 5 minutes for price to drop all the way, within 1 minute, you know whether to open the position or close the position, right? Whenever price it went up, then small pullback, went up, pullback, went up, pullback, went up, pullback, went up, pullback. So you are This is like 4 5 point drop. This is like 5 6 points drop. In 5 minutes, your drop can be big. So that's why you are looking at smaller time frame and taking that. As long as this is in the buy, you are looking for the T3 buys or T33 buy or top trend buy, beta buy, whatever, right? Whichever indicator you are using, you will use the buy signals based on the price pulse direction. Yeah, sometimes a live trader will automatically close the trade. Otherwise, yeah, if you still see the trade open when the evening market opens, then yeah, you can take the profit. So again, right, don't get confused so much. Always look for 5 minutes for the direction. Your 5 minutes will tell you what direction you have to use. Your 1 minute, you will only take the, if you have a price pulse buy, you will only take the buy signals, T3 buy, top trend buy, whatever is the buy, right? Whatever indicator you are using, right? This is your main one, which will tell you what is the direction you have to follow. This is the secondary indicator. If you have a price pulse buy, you will only use T3 buys. Whenever you see T3 buy, you take a trade, make 100, 150, close the trade. Again, you see a T3 sell, you just ignore it. Again, you see a T3 buy, again, you take the trade, you make the profits, right? So this is for members who are getting, right. Otherwise, what we were doing, we were waiting for price to come back to the T5 line, go long. Wait for price to come back to the T5 line, go long. Now, this additional indicator will help you to know, okay, when to buy it, right? Price came down and again started going up. So it is T3 is telling, okay, now you can go buy. Okay, whenever you get a buy, you see that, okay, price pulse is still in buy. Okay, I'll go and buy it like that. Or yes, there is a PP sell. Then whenever you have a T3 sell or top trend sell or beta sell, whatever, only you will follow the sell signals. Yeah. So that's it, everyone. Again, we'll do in the evening time, right? In the live session, we'll take the trades. But I hope, right? Because I see that there are members who are still getting confused. There are some members who are making 10K per day in each account. So with this strategy, you don't need to, right? Just you look at price pulse buy and T3 buy or price pulse sell, T3 sell. Right? It can be T3, it can be T8, it can be top trend, it can be beta, it can be anything. But your main one is your price pulse buy or price pulse sell. As long as price pulse is in the buy, you go to in the other part, you do 1 minute, and then you can keep clicking on the buy sell, right? You don't even need to open the trade button or anything. You don't need to, just you can see like either ES or GC or whatever is the bullish sticker on the day. You just follow this strategy, right? Generally, ES every day you will have a lot of liquidity. If you just follow for ES or GC, that is good enough. NQ, sometimes the candles can be huge, so you can avoid NQ. But if you follow the strategy with ES, you will be very, very successful. Right? I am just adding you one more thing so that earlier what I was doing is whenever you get a buy, then in 1 minute you used to wait for candle to come to the T5 line, then again go up. Again, when you make profits, again price will come down, again it will go up. That's what you are doing. But now, because some members are getting confused, what I'm telling you is have price pulse and then have some other indicator like T3 or stop trend or T33 or P8 or any indicator which will give you a lot of buy sell signals. Because price pulse will only give less number of signals. Right? Whenever it sees it is going up, it will wait. But same thing, for example, if I hide this one and if I say T3, you got a T3 buy, you got a T3 buy, you got a T3 buy. T3 will give multiple times. Whenever price goes up, when it comes back and starts going up, again it is telling, oh, price is going up. You can buy one more time. Again, price came down. Again, it is going up. Again, it gave a buy. So you can use that as your. So you know when to buy it. When so you know when again price is going up. So again, right? Just to summarize, in one side you have your higher time frame, like 5 minutes. Then wait for a price pulse buy or price pulse sell. Whenever you get a buy or sell in the 5 minutes time frame, in the other side you go to you use T3 or you can use top trend, you can use beta, whatever you want, you can use the other indicators. And whenever you get a same direction trade in the smaller time frame, you take the trades and you make 100 $150, you take profit. Again, you will get a buy. Again, you take $150, take profit. Until you see a sell signal, you can keep doing the same thing. Once you see a sell signal, again you wait for T3 sell and keep taking the trades. Okay? You can just watch GC or ES or silver or copper, right? Any high momentum tickers, right? By looking at your watch list, you know that okay, this is natural gas is very bullish, or GC is bullish, or ES is bearish, NQ is bearish. Like that, you can just to take one of the most bullish or most bearish tickers, and you can repeat this process for the entire day. You can easily make few $1,000s in each prop account. Right? I hope everyone is clear about how to use the earning strategy in the daily time frame and how to do the prop firm trading in a smaller time frame. Right? Just practice it. Right? As you know, many of members are making nice profits. So all you need is practice for few days. It is okay if you want your practice in a paper account. Right? Every day market will give opportunities. You take paper trading and just practice this approach until you become perfect, until you understand that okay, if it is a buy, I have to take only buy signals in smaller time frame. If this is sell in a higher time frame, I have to take only sell signals. Then once you do it for a few days, then it will become right. You won't take the wrong trades in the wrong direction. Right? Again tomorrow morning, because when you trade in 1 minute, it is difficult for you to follow. Right? Because when I scalp quickly in 1 minute time frame, right, quickly it drops. I make $100 $200, take profit, again wait for it, or I go and go little bit up, put my sell order little bit up, or put my buy order little bit up. For you, it is difficult to watch and follow it. But if you understand the logic and try to repeat the same thing, you can make nice gains every day. So yeah, again, right, I'll do some trades. So if you have T3, you can also use you can also use T5. So if T5 becomes red, or whenever the price pulse is buy, whenever T5 becomes a green dot, you can take a long trade. Whenever, right, this is like a buy signal. Whenever if your 5 minutes is in the buy, whenever you see a buy signal in T5, you can go long. Yeah, okay, everyone. We'll talk again in the evening. Right, we'll do some live session. You'll understand. But yeah, just practice it, and yeah, there will be a lot of opportunities every day. Bye, everyone. Have a nice rest of the day, and we'll have a setup session at 4 p.m. If anyone has any questions, we'll help during that session. Bye, everyone.